So good evening once again to all the members of the Madras Tax Bar and to all the participants. Today we are back with our series of webinars, which for the last 5 days we didn't have, but then we are good to start again with this wonderful lecture today organized by the women panel. So from the rules will be the same. First, the entire panel will be having their discussion rounds, and once everything gets over, they will the moderators itself will start organizing the question answer session. So I think this these are the only instructions for today. The option to unmute has been enabled, but I request the participants not to unmute themselves if you are not speaking, so that there will not be any disturbances in between. So thank you once again. Over to Aparna ma'am.
Actually, Vardhini, you can start.
Vardhini ma'am, sorry.
Good evening to one and all present in this MTB webinar series 2.0. Today's session will be the 69th session and it is going to be an all-women panel. We are happy that MTB has given the junior women lawyers to share a platform with successful women advocates. Shakespeare's Portia in Merchant of Venice was dressed as a man to appear as a lawyer in court for a trial and used her women intuition and creative thinking to get a favorable order. Moving on to Sangha Tamil epic Silappadigaram talks about Kannagi. She fights against the injustice rendered by the Pandyan king of Madurai, and she also proved that the anklet sold by husband was her own and not the one stolen from the queen by breaking the anklet and showing the difference in the stones inside. Today, we are going to have 5 distinguished seniors who have made a mark in the profession with their intellectual knowledge, elegance, and grace. Today's panel will give an extensive knowledge on different kinds of assessment under the indirect and direct tax laws. The panel is headed by Mrs. Pushya Sitaraman, Senior Advocate, Madras High Court. Mrs. R. Hemalatha, Senior Standing Counsel, GST, Customs and Income Tax, will discuss the assessment under VAT enactments, and the baton will then be passed on to Mrs. L. Maithili, Advocate, who will take us through different kinds of assessment under the Central Excise, Service Tax and Customs Law. And then forward would be taken by Mrs. Aparna Nandakumar, Senior Standing Counsel, GST and Customs, and she'll be giving us an overview of the assessment under the GST Act. Mrs. Hema Muralikrishnan, Senior Standing Counsel, GST, Customs and Income Tax, will elucidate on the assessment under the Income Tax Act. And the session will be concluded by Mrs. Pushya Sitaraman, Senior Advocate. The moderators will be the moderators for the panel discussions are Ms. Usha Rani, Ms. Vardhini Karthik, myself, Shivaranjini, Nivedita Mehta, and Jayalakshmi. At the end of the session, the floor will be open up for interactions. So the first speaker, I'm happy to introduce Mrs. R. Hemalatha, Senior Standing Counsel for Customs and GST and Income Tax. She has been one of the significant pillars in MTB and had taken a lot of initiative in arranging the webinars. She carries an impeccable elegance and grace. She is in the practice for the past 25 years and has conducted about 12,000 personal cases and 200 cases before the Supreme Court, and has also have many reported judgments to her credit. I'm also happy to introduce Hemalatha ma'am because I share a very strong connection when it comes to professional lineage. She had been the first junior to Pushya ma'am. I am the most junior in Pushya ma'am's office. So I invite Hemalatha ma'am to open the session today, the assessment under VAT law.
Good evening, one and all. Thanks, Madhuri, for the kind and warm introduction. The topic before the floor is assessment and reassessment under the VAT Act. Nearly 2,000 cases are pending before the High Court, and there are 2 or 3 batches in the High Court also. Still, we are receiving VAT assessment for challenge. Now, let us see the VAT enactment. The first slide. The VAT was introduced in the year 1/1/2007. Section 21 deals with the filing of returns. Here, the dealer has to file a return on or before 20th of every month, along with the proof of payment of taxes and accompanied with the documents. Please, second slide, please. Second slide. Then Rule 7 is the machinery provision for the Section 21. Here the procedure enumerated for filing a return in terms of Section 21. Second side. First. Rule 7(9) deals with the revised return. If the assessee finds any omission or error in the assessment in the return, he can file a revised return within 6 months from the date of the original return, 6 months along with the payment of tax and along with interest. Moreover, for example, actually the return of December, we can file the return on January 20th of January, on or before 20th of January. The revised return can be filed on or before 20th of June, that is 6 months. Next slide, please. Section 22 deals with the deemed assessment. So, based on returns filed by the assessee, the assessing authority can make a deemed assessment. It's not necessary to serve the deemed assessment to the assessee. This next slide. Next slide. Second slide. Previous slide, please. Previous slide. Next.
Is it fine?
22(3), the provision act. Not this one. Previous one, sorry. Previous one. Previous one. Yeah, thank you. See, 22(3) deals with the scrutiny assessment. The commissioner is empowered to collect 20% of the assessment to check the correctness of the return. If necessary, the revision of assessment shall be followed. Next. Section 22(4) deals with the BJ assessment. If no return is submitted or return filed to be incomplete or incorrect, the assessing authority can make an inquiry and has make a BJ assessment. The BJ assessment can be passed after the completion of assessment year. The show-cause notice should be issued to the assessee before passing the assessment order, and the personal hearing is mandatory in this section. Next slide. Section 22(5) deals with the penalty. So, apart from the tax levied in the assessment order, the assessing authority shall levy the penalty to the tune of 150% of the tax difference in the tax assessed, 150% of the tax assessed and tax already paid as per returns. The penalty can be imposed within 6 years from the date of original assessment order. Before imposing the penalty, the assessee should give a show-cause notice before passing the order for penalty. The next step. Section 22(6). After passing the order under Section 22(4), the assessee can file an application along with the correct and complete return, requesting the assessing authority to revise the assessment order. If the assessing authority is satisfied the failure to file a return in time was due to reasons beyond the control, the assessing authority can make a fresh assessment, cancelling the old assessment based on the return. Here also the return can be filed along with the payment of interest, along with the payment of tax and also with the interest. Next, Section 23 deals with the deferment of assessment. If any question of law is pending before the Supreme Court or High Court, the assessee can make an application before the concerned assessing authority to keep the assessment in abeyance till the disposal of the appeal before the High Court or Supreme Court. The assessing authority can admit or reject the application. Section 24 deals with the assessment of sales shown in accounts at lower prices. Here the assessee is shown a lower price in the returns. The assessing authority can make a BJ assessment after giving a show-cause notice to the assessee. Next slide. The procedure to be followed in certain cases. Section 25 deals with the provisional assessment. If the assessee fails to file a return filed to be incomplete, incorrect, the assessing authority can make a provisional assessment The provisional assessment cannot be made after the completion of the assessment year. Next one. Section 26. Section 26 deals with the assessment of legal representative. When the dealer dies, his executor, administrator, or legal representative shall be deemed to be dealer under this Act. Moreover, if there is a tax liability, the legal representative shall be liable to pay the tax to the extent of the assets of the deceased in the hands of the assessee, and in the hands of the legal representative. Section 27 deals with the revision of assessment. If any turnover has been escaped, or part of the turnover or whole of the turnover has been escaped, the assessing authority may revise the assessment within 6 years from the date of the original assessment order after making such inquiry. 27(2) deals with the wrong availment of ITC. If the ITC has been availed wrongly or produces false bills, vouchers, declarations, certificates, or any other document, the assessing authority can reverse the input tax credit within 6 years from the date of the assessment after making inquiry. Here also that the assessment order has been passed after issuing a surplus notice. After that, we can see there is a circular based on the Ramanujam committee. The circular states that certain procedures have been followed in claiming the assessment. Next slide. Madhuri, next slide.
I'll try now.
Next slide. Sorry. Sorry. Apart from the section 27, the assessing authority can impose a penalty in respect of the escape of assessment. If there is a willful non-disclosure, the assessing authority can impose penalty 50% of the tax due. Tax of the turnover, the tax due is less than 10%. The assessing authority can impose 100% of the tax due or the turnover that the tax due is more than 10% of the turnover. More than 10% of the turnover. The assessing authority can impose 150% of the penalty on the tax due if the tax due is more than 15% of the tax paid as per return. Moreover, section 27(4) deals with the wrong availment of ITC. The assessing authority shall impose a penalty to the sum of 300% of the tax due in respect of such claim. Even there is a appeal is pending before the original assessment for the original assessment, the assessing authority has power to revise the assessment order. Second slide. Within second slide. Here, the assessing authority has power to rectify the error apparent on the face of the record. The assessing authority can rectify an application made by the assessee or on his own motion. The assessing authority can rectify the error on the apparent on the face of the record of the assessment within 6 years from the date of the original assessment order. If there is an enactment of taxes, the assessing authority shall issue notice to the assessee. There are a lot of judgments in this assessment. Due to the scarcity of time, I am not able to lay my hands to place the judgments in the forum. I am just saying the one judgment in respect of SRC project versus Commercial Tax Officer. Here, based on the circular issued by the Commissioner, the judgment has been rendered. In respect of the section 27, section 27 does not mandate the personal hearing. If any request is made by the assessee in the objection, the assessing authority shall give the personal hearing before passing the assessment order. But this judgment has been distinguished now by the other learned single judge in the State Bank of Association, State Bank of India Office Association versus Commercial Tax Officer. This is confirmed by the division bench also. Over to Jayalakshmi. Thank you very much.
Thank you so much, madam, for taking us through the pertinent provisions of VAT law dealing with assessment and for explaining the difference between kinds of assessment under VAT and detailing the same with case laws. This is of great importance even today, though it's a legacy law. The next speaker for the day, one of the most stylish seniors in the bar, Our next panelist for the day, Mrs. L. Maithili, is a seasoned advocate with an illustrious litigation profile spanning more than 3 decades. She graduated from Delhi and completed her law degree in Mumbai. After enrolling in the Mumbai bar, she moved down to Chennai to collaborate with one of the leading advocates in tax of yesteryear, Shri Sashidharan. With an experience of 33 years in tax litigation, she is a much sought after expert in this field, representing various MNCs and international corporate bodies pan India. Her litigation journey isn't confined to tax alone. She practices various commercial laws, company law, family law, etc. She's an inspiration not only in academia or advocacy, but also with her keen eye for art and great sense of aesthetics. Her persona reeks of elegance and grace. Today, she is going to elaborate on the aspect of assessment under the 3 statutory pillars of legacy law, namely customs, central excise, and service tax, and how they function in harmony to ensure a foolproof way of accounting and taxation. Over to you, ma'am.
Thanks a lot, Jayalakshmi, for this rather, I would say, an exaggerated praise, but thank you very much. It's a great way to start, encouraging really. And here we are. Well, before we go on to this whole thing, when I get going, as we all know, assessment is the life, it is the heart and soul of any taxation. It's only on assessment that there's a determination of liabilities. Liability to tax itself depends on assessment, and that is why we are discussing it today. And the concept of assessment, the customs, central excise, and service tax laws have a lot of overlap. So I'm presenting here today. First, you may have a look at this slide, which has got, just to give you the background and form the context, is what is the charging section and what is the nature of the tax, is the only reason why there are differences in the way it is structured, that they are practically the only differences. As you all know, these are all the provisions. Charging section under the customs is a tax on import and export. Central excise is a tax on manufacture, and service tax is a tax on various services. Now it has been, after 2012, we had the negative list scheme that brought in, so it's all very structured. And this is what forms the backbone of GST, what Aparna will be talking about. So we move over to the next slide, please. Vardhini? Yes. Now, as I said, they're all interrelated. There's a symbiotic relationship between these 3 laws. Central excise heavily. So there will be common terms. So next slide, please. Next slide, please. Yes. Can you move assessment now? So what is assessment? Here we need to look at the statutory definitions. Previous slide. What is assessment? Under the Customs Act, Section 2(2) defines assessment to mean determination of the duty liability of goods on the duty and the tax payable with reference to the tariff classification and the value. Basically, it's since given the nature of the tax, customs is about, you have to determine what is the classification, what is the value, and what are the exemption notifications available, and thereafter the assessment process is completed. And in customs, self-assessment was brought in as late as 2011 as part of the definition, or with effect from 8/4/2011. It is only then that self-assessment was included, and otherwise a bill of entry is filed at the time of import and it is stamped based on the declaration. And there is a certain assessment that used to happen earlier, included, has been correspondingly amended to say that there will be a self-assessment, and on a selective basis, the proper officer can check whether whatever verifications required, he can reassess. And if the reassessment is not accepted, it goes on to becoming the Yes, after reassessment, you have under 17.5, speaking order has been issued within 15 days of reassessment. Otherwise, the original assessment stands. That's what the Calcutta High Court has held. Now, under Central Excise, assessment has been defined under Rule 2B of the Central Excise rules. And it includes self-assessment and provisional assessment under Rule 7. Rule 6 of the Central Excise rules prescribes that an assessee shall assess the duty payable on the goods himself. And service tax assessment has not been specifically defined, but the term assessment defined under assessee has been defined. The person liable to pay tax is the assessee, and the definition under Central Excise would apply since that has been made applicable. And in Finance Act of 2001 brought in the concept of self-assessment in service tax. Section 70 was inserted, according to which every person liable to pay service tax shall himself assess and pay the service tax due. And a concept peculiar to service tax is best judgment assessment, particularly with Section 72, which was inserted. In fact, it was reinserted in Finance Act 2008, which provides for the best judgment assessment when a person liable to pay service tax fails to furnish the returns under Section 70, or having made the returns fails to assess the tax in accordance with the service tax laws. And then the Central Excise officer can go ahead and make a best judgment assessment. Next slide, please. While, as you have seen, self-assessment is a norm in all three enactments. Provisional assessment is, however, there as an except. In a case where self-assessment is not possible for any reason, in the case of Central Excise and Service Tax, only the assessee can request for provisional assessment. It is not at the discretion of the officer. By making a written request for provisional assessment, giving the reasons why self-assessment is not possible, he can be allowed provisional assessment subject to terms and conditions on execution of bond. Likewise, in customs also a written request for provisional assessment can be made. Nonetheless, in customs you have the additional situation where the proper officer of his own accord may direct provisional assessment where he thinks there is some testing or some peculiar circumstances requiring additional verification, which makes assessment at the time of import or export not possible instantly. And in those circumstances, provisional assessment may be ordered. And yes, now, so it is only after assessment that a tax liability is. Tax liability do we come to the next point of recovery? What is the tax that can be recovered and how can it be recovered? There is a reopening of assessment in a sense is possible by where there is an assessed tax and there is, in the view of the department, a short levy or a short payment of duty or tax. A show cause notice has to be issued to make a recovery of the short paid or not duty not paid or an erroneous refund. Here the provisions are within the normal period of limitation where there's no fraud, pollution, etc. Under customs, it's section 28, under Central Excise, section 11A, 28.1 and 11A1 talk about 2-year period within which a show cause notice can be issued. That is a normal period. This is of course an amendment. Earlier it was 1 year. Prior to, I mean that period has been changed over a period of time. And under section 73 for service tax, it is 30 months is the normal period of limitation. In all three enactments where there's fraud, suppression, etc., you can go back up to 5 years. But here again, it may be kept in mind, so far as provisional assessment is concerned, it is only the date, the relevant date definitions can be gone into. Relevant date, the time period has to be, with respect to provisional assessment, is a date of finalization of assessment where there's an adjustment of the duty that was paid provisionally against the duty actually payable. So next slide, please. Now we come to assessment and refund. here again, this is what an assessee is always concerned about. How do I get refund? Which is always a tricky process. Here, first of all, let's look at the provisions. Under customs is section 27, central excise 11B, and section 11B is made applicable to service tax. In an application for refund has to be made within 1 year from the relevant date. And in case of customs, from the date of payment of duty. Here again, it is important, making assessment central to our today's topic. It's all refers back to the assessment. It is on assessment and crystallization of the tax that is payable that the question of demand or refund would arise. These are two sides of assessment. So that is where and here, after the amendment that was brought about in 2011, there was a issue about, prior to that, there was a lot of controversy regarding when a refund application, whether a refund can be claimed with respect to a bill of entry which has already been assessed, and whether you can go back to the department and say, no, I did not claim this exemption was not extended to me, or this classification was not correct, and therefore I have paid excess duty and it has to be refunded. In this issue, as you all know, we had Priya Blue, Flock India, and all those cases. Now, this controversy, even after the 2011 amendment was pressed into service, where self-assessment is also assessment, was a area of controversy. Here, now there was a Delhi High Court judgment in the Micromax case, and several judgments of our own High Court on this issue. But now the Supreme Court, a 3-judge bench in ITC case, has traced the entire history of this controversy in 2019, 368 TLT 216, ITC Limited to the CC Kolkata. And now now the only way we can have that changed is section 149. If the mistake has been made in the bill of entry or bill of you can, if you want to seek refund, you have to have that amended, which means your assessment takes place on the amended document. I think, thank you very much. Thanks a lot for listening in. Nivedita, you may continue with the introduction.
Thank you, ma'am, for that very enlightening presentation. Now, Aparna ma'am needs no introduction to this audience. However, I have been given the privilege of introducing her, so I'm very excited to do so. Aparna ma'am is the Pushya of MPP, but unlike Pushya, she has formal training in law and a sea of experience in the field of taxation, especially GST. She is, as we all know, Senior Standing Counsel for Central Excise Service Tax, Customs, and GST in the Madras High Court. As a central government standing counsel and Pushya at that, she is bound to take her pound of flesh as revenue for the government. So it is but natural that she will be talking to us about assessment in GST. Our Aparna ma'am is a 4th-generation lawyer and the granddaughter of late Justice B. Balasubramaniam. She has also worked in the chamber of 2 esteemed judges of the Madras High Court till their elevation, late Justice N. B. Balasubramaniam and Justice Chitra Venkatraman. Let me not take up any more time of the presentation that awaits us. Ma'am, how do you think that the legacy laws that Maithili just described would flow in, and how do you think the GST laws have adopted this?
Yes, thank you, Nivedita. Yes, definitely the VAT enactments and the central excise customs to an extent, and the service tax, they've all, you know, it is a conglomerate. GST is a conglomerate because the central excise, service tax, and the VAT have all gone now. Of course, the assessments still stand alive due to Section 174 of the GST Act. But then the provisions, especially with regard to assessment, they've gone into the neurological pathway and led to the mind of the legislator to, you know, pick and choose from the various enactments and to form what is known as the assessments under one particular chapter under the GST, which is chapter 12. So can you go to the next slide, please? Yes. Now, under chapter 12, we have the assessments, except the sixth one, which I mentioned. The first 5 are mentioned under this particular chapter, chapter 12. So it talks about self-assessment, provisional assessment, scrutiny assessment, best judgment assessment, and summary assessment. Now I'm, because see, the time allotted to each speaker is 15 minutes, so I'm not going into the revision of assessment. Revision of assessment is post-audit, because if you see the placing of chapters, chapter 12 is assessments, which is pre-audit, based on the returns submitted. Then there is these next chapter is on investigation and audit. Then we have this chapter on search and seizure. And then chapter 15 deals with demand and recovery. Section 73 and 74, which deals with the determination of tax liability, which you can call it as revision of assessment, are placed under that chapter. Now, if you take the, I'm not talking about provisional assessment as of now, because I'm going to deal with it in a detailed manner. I will just rush through the scrutiny, best judgment, and summary assessment first, and then I'll take you through the provisional assessment. Now, in scrutiny assessment, what happens is, as you all know, the self-assessment, the taxable, no, previous slide, yes. Remain here until I tell you. So the returns are filed by the taxable person, and then the officer looks into the returns, and if he finds any discrepancy, he issues a notice. And you all know under the GST, there are specific forms. In fact, in the slides I've given, I'm not going through all those slides because of paucity of time. The slides are going to be shared anyway. So what happens is he issues a notice stating about the discrepancies. The explanation is sought for. If the explanation is satisfactory, he may even drop the scrutiny assessment. But if the explanation is not satisfactory, then the officer will say that you have to pay the tax, whatever tax that you have to pay, that has to be paid along with the interest. And of course, suppose the officer, the assessee pays it, then fine. Otherwise, it will the procedure will automatically go to 73 and 74. Now, in the case of best judgment assessment, you all saw that even under the service tax from 2011, we have the best judgment assessment. But basically, best judgment assessment, you can find the reference. You can find the reference to the VAT enactments. In best judgment assessment, there are 2 sections actually under this chapter, which is section 62 and 63. 62 talks about best judgment in the case of non-filers, and the section 63 talks about assessment of those persons whose registration has been cancelled for non-payment of tax. In such cases also best judgment assessment is resorted to. But the difference between 62 and 63 is, very surprisingly, of course, the upper time limit, which is very, the uniqueness about GST is, unlike the earlier enactments, VAT enactment, for instance, in the case of best judgment assessment, there was never an upper time limit fixed. But in the case of GST, the upper time limit is fixed, which is 5 years. And in the case of the, the best judgment assessment with regard to non-filers, surprisingly, the section, not the rule, both do not give any opportunity of personal hearing. It only talks about show cause notice and a reply, which is just 15 days. That is going to be a contestable issue. But in the case of best judgment assessment with regard to cancellation of registration, those dealers, there is a specific reference to an opportunity of personal hearing. That is the difference between these two. Now, talking about summary assessment, which comes under section 64, it talks about an assessment made on a person. Maybe you can go through to that slide, Vardhini, and then come to provisional assessment. Can you just move the slides? Because see, this is a very, very unique, yeah, go down. Go down. No, summary. No, next. Next. I think, yes. Now go to the next slide. No. Okay. I think she's, right. Now, this section, I would say, in the eyes of the assessee, it's a very draconian provision, which I think the assessees will agree with me, assessee councils will agree with me, because it talks about assessment of any person. See, the term any person would include even a person who is not a taxable person, if there is evidence of tax liability available and it is prejudicial to interest of revenue, and the section says if the proper officer has got sufficient grounds to believe that the delay may adversely affect, he can immediately pass an assessment order, summary assessment, with the, of course, with the prior permission, which is in the next slide I've shown, with the prior permission of the additional commissioner or the joint commissioner. Now the worst part is, can you go to the next slide, please? Next slide. Yeah. See, it doesn't mention, see, you have to look into section 64 and also rule 100. Both these provisions does not speak about the issuance of a show cause notice. If you see the other provisions, you will have the rules will have the particular form. But as far as rule 103, which is relatable to section 64, I don't see any mention of any form for a show cause notice. The section also does not speak about that. And there is no minimum or maximum time limit prescribed. And go to the next slide. Next slide. Next slide. Yes. No, next slide. The proviso says the liability, suppose the taxable person, see, the liability has been fixed, but the proper officer is not able to find where the taxable person is. Especially in the case of a supplier of goods, a taxable person with supply of goods, in such a case where the taxable person is not found, then the person in charge of the goods, when the taxable person in regard to supply of goods is unascertainable, the person in charge is deemed to be the taxable person. Now, this is a very, I would say, a draconian provision, and it is going to open up a spate of litigation. I'm very sure about that. Then now I will take you through the provisional assessment, because I just want to discuss certain judgments which were, yes, provisional assessment. You can opt for slideshow, yes. Now, yes, provisional assessment, as you all saw when Maithili has already discussed on that, provisional assessment arises when the assessee gets a doubt as to the valuation of the supply or with regard to the rate of tax. Now, this has been adopted straight away from the Central Excise Rule 7 of the Central Excise Rules 2002. I will also take you through the history of this, provisional assessment under the Central Excise Act, and I will also touch a bit on Section 18 of the Customs Act, because it has a great influence on Section 61 of the GST Act. And what is the procedure? As usual, there's a written request stating that this is my approximate value, this is my approximate tax that I'm going to pay. And then there can be a notice by the officer asking for additional information. There is a reply. And unlike the earlier legacy laws, of course, personal hearing is also granted. Unlike the legacy laws, the section uses the word shall. Now, if you see the earlier laws, that is service tax, central excise, it says the officer may may agree on the request made by the assessee, but here the word used is shall. That means the officer, when there is a request for a provisional assessment, from the reading, it looks as though the officer has to issue an order agreeing for the provisional assessment. Now, unless there is any officer down the line who's going to view shall as may, use the rules of interpretation and say it can be interpreted as may, we may have to, as on today, statutorily, the understanding that we all have to draw is that shall means officer has no choice. Okay, next slide. Now the procedure, the same, the furnishing of bond, and then, and yes, this is very important because see, there's often confusion. We are, as you all know, that we are following the doctrine of simultaneity, which I discussed earlier, because there are two enactments, CGST and SGST, acting simultaneously. So when we say, when the section says bond, what do you mean? Bond on the 25% and the security on 25% is the amount. What is the meaning of amount? the rule actually clarifies it by saying when the mention of the word amount is, that includes IGST, SGST, UTGST, cess if any. And secondly, it also says that the bond furnished under any one of the enactments, either CGST or SGST or whatever, it will be deemed to be a bond under the other enactment. Therefore, there is no doubt, because see, we had this confusion when we were talking about advanced ruling, the fee that is payable, but when it said 5,000, then, for advanced ruling, the application for advanced ruling, whether it is 5,000 or 10,000, because it is CGST 5,000, SGST 5,000. Likewise, when you file appeal, it is 10,000 under CGST and 10,000 under SGST. So, but that doubt is no longer there, because the rule makes it very clear that if you furnish a bond with the amount, that amount includes the entire, it is a consolidated amount, and the bond is deemed to be a bond under any of the other enactment, which is not under other enactment also. Okay. Now the procedure is, once this he has to pass an order within 90 days, and the after that there has to be a finalization of assessment. The time limit is 6 months, extendable by another 6 months by the Joint Commissioner or Additional Commissioner, and it is extendable by a further period not exceeding 4 years. Now here there is a variation from the Central Excise, because Central Excise, the Commissioner, the upper limit is not mentioned. That is, the extendable period by the Commissioner is not mentioned. However, in the case of in Section 61 Provisional Assessment, the upper limit is 4 years. Now coming to, and I'll just rush through this. We'll go to the next slide because I want to refund. Okay. Now, this section on finalization of assessment, if there is any excess, of course, it has to be paid, and the interest has to be calculated from the due date mentioned in section 39(7) till the actual, so the interest is calculated accordingly. Now, when we talk about refund, suppose the finalization of the provisional assessment results in a refund, then it says subject to the provisions of section 54(8). Now, what is 54(8)? So section 54 deals with refund. If you see section 54(5), it says that the refund will be credited to the consolidated fund. Now 54(8) says, yes, notwithstanding what is contained in section 54(5), 54(8) lists out the circumstances. But what is important in section 54(8) is that you have to, that is, the assessee has to satisfy the test of unjust enrichment. What is the test of unjust enrichment? That he has not passed on the incidence of tax to another person. That is very important, because if you see, go to the next slide. Yes. Now, before going to the aspect of unjust enrichment, the question that one may ask is, because the word used is amount, is it a pre-deposit or is it tax? I will just pause here. I'm not going to discuss on this because I want the floor to discuss on this. And is it paid under protest? That has also been solved by allied photographics under the Central Excise. But anyway, we can have a discussion on that. Is the test of unjust enrichment applicable to refunds pursuant to finalization of provisional assessment under GST? The answer is no. Reason, next slide. Okay, next slide. We've already. Okay, now what is the, let us just quickly, we'll go through the provisions. What happened? Rule 9B as it existed, that is 9B of Central Excise Rules 1944 as it existed till 25/6/1999, specifically did not provide for the application of section 11B. Therefore, Mafatlal, there is a particular paragraph 95. In some others, it says 104. But it says that as far as finalization of provisional assessment is concerned, that is a refund aspect, one need not go to through the procedure mentioned in section 11B. Therefore, the test, there is no necessity for satisfaction of the test of unjust enrichment. This was the position prior to 25/6/1999, and then there was a proviso added, and by virtue of the proviso, it was mandatory that this test of unjust enrichment had to be satisfied. Therefore, that was adopted in Rule 7 of Central Excise Rules 2002. Therefore, now the procedure under Rule 11B has to be followed in the central excise. Likewise, in customs, the position of section 18, which existed till 13/7/2006, there was no necessity for satisfaction of unjust enrichment. However, after 13/7/2006, where there was an amendment, the test of unjust enrichment had to be followed, even in the case of refunds with respect to Customs Act. Now, these are the judgments. You can go through these judgments, very important judgments. In fact, in Allied Photographics, there is they have discussed about the aspect of tax paid under protest and tax paid in the provisional assessment. You can go through that. Then next. Okay. Next. Okay. Now, another question that came up in the legacy regime, whether the provisional assessment is issue-based. Now, suppose with only one particular aspect, there is a request made by the SSC, and there is a provisional assessment. Is it going to be issue-based, or is it a provisional assessment for all purposes? Madras High Court has held in the case of CCE Madras versus India Tire that it is a provisional assessment for all purposes. It cannot be an assessment provisional only on issue-based. Therefore, since the provision has been adopted from section from the Central Excise, Rule 7, Section 61, therefore, this judgment will still hold good according to me. Next, this is yet another very interesting judgment which came up in the context of the Customs Act. Mr. A.P. Srinivas has appeared for the revenue and Mr. Raghavan has appeared for the importer. Now, this is a case where there was a request for provisional assessment under Section 18, and the amount was paid, but unfortunately, there was a clerical error. He had paid extra. And then what happened before the finalization of the provisional assessment, the importer sought for rectification under Section 154. 154 provides for rectification of arithmetical errors or clerical errors. That was rejected, and the matter went on appeal before the first appellate authority commissioner. Commissioner said appeal will not lie because it is only as against the rejection of a clerical mistake. Matter went before the CSTAT, and CSTAT, actually the argument that was taken before the CSTAT is that under Section 154, why is it not possible for me to correct the clerical error when the finalization of provisional assessment has not happened? And the CSTAT held it in favor of, held it in favor of the importer. Matter came before the Madras High Court Division Bench, and Division Bench has held, yes, definitely, because the subject, the satisfaction of the test of unjust enrichment is always there. Therefore, you can certainly correct it even before finalization of assessment. Now, will this judgment apply in the context of GST? Yes, because if you see Section 161, the provisions of GST are actually very clear cut. In the sense, each chapter has a specific heading. So you don't have to rummage through the provisions. After the transitional provisions, we have the miscellaneous provisions. And in miscellaneous provisions, you have Section 161, which talks about rectification. And in rectification, if you see the second proviso, it talks about correction of clerical mistakes. And fortunately, in the case of correction of clerical mistakes, there is no necessity for observance of the time limit of 6 months. It's an accidental slip. So in my opinion, this judgment will also apply in the context of GST. Next slide. Yes, so with this I've completed. I think I could do justice about the, thank you very much for the opportunity, MTB.
Good evening to all. Thank you, Mrs. Aparna Nandakumar ma'am, for your wonderful presentation on the assessment under GST, which was very informative and very useful for advocates, young advocates like us. Having been enlightened on various kinds of assessment under different acts, now we will be moving on to the next presentation, and I take the privilege of introducing the next panelist, Mrs. Hema Muralikrishnan ma'am, Senior Standing Counsel, GST and Customs and Income Tax. A senior of more than 20 years of experience at the bar, she is an expert not only in indirect taxation, but also an advocate par excellence in the field of direct tax, service, and education law. She has a unique flair when it comes to drafting petitions challenging constitutional validity, a multifaceted personality with equal expertise in all the fields she practices. Her cheerful and humble persona is the biggest takeaway for juniors like us, only second to her skills of argument. She'll be speaking today on the various assessments provided under Income Tax Act. I hereby request ma'am to enlighten us with her knowledge and give us the presentation on assessment under Income Tax Act. Ma'am, over to you.
Thank you, Shivaranjani. I seriously really doubted whether you were talking about me or somebody else during this session. Anyway, I really thank you for your kind words. Now, since I'm talking on direct taxes, I actually, all of you know that I started practice in indirect taxes. So when it came to direct taxes, a few basics that really took some time for me to understand, I will present it before this forum. Now, one thing to be remembered insofar as income tax is concerned is, there are three concepts: previous year, financial year, and assessment year. Now, the previous year and the financial year are the same. Previous year is equal to a financial year, but financial year is not the assessment year. Now, insofar as indirect taxes is concerned, Prithvi?
Yes.
Audible, no? Okay, fine.
Yes, you are.
Sorry. Insofar as indirect taxes is concerned, the financial year is always the assessment year. But insofar as income tax is concerned, colloquially, an assessment year would mean the year subsequent to the financial year. That is, in other words, now, assuming that the financial year is 1st April 2019 to 31 March 2020, then the assessment year for that financial year would be 2021. Therefore, one has to remember that under the Income Tax Act, whenever the periods of limitation are talked about, the period of limitation have to be calculated from the end of the assessment year. We don't, normally when it's an indirect tax assessment, we calculate the period of limitation from the end of that financial year itself for which the assessment is being made. Now, insofar as income tax is concerned, the limitations will have to be calculated from the end of the assessment year. And then the most confusing part in an Income Tax Act that I found in the very beginning was, there is nothing direct in the provisions in the Income Tax Act with regard to assessment or reassessment or as to the power to issue, because if you see the Income Tax Act, the power to issue notice would be in one section, the procedure to be followed by the assessing officer will be in several other sections, power to pass order by the officer will be in another section, and the period for limitation for all these actions are in another separate section by itself. Now, the different types of assessment that one would find under the Income Tax Act are an assessment under section 140 capital A, which is a self-assessment, assessment under section 143(1), which is otherwise called an intimation assessment. This is a summary assessment. Assessment under section 143(3), which is a scrutiny assessment. Assessment under section 144, that is best judgment assessment. Assessment under section 147, that is income escaping assessment. Now, self-assessment, section 140 capital A, we don't need to go into much detail because this is a normal assessment which we would find across direct taxes or indirect taxes, where an assessee makes a self-assessment of the income that he is earned, the tax that according to him is payable, and which tax he will pay after taking deductions of any advance tax that he is already paid, or whether any TDS has been deducted, etc. So therefore, self-assessment is something akin to all self-assessments under all the acts. Now coming to section 143(1), that is an intimation assessment. Now this is nothing but it is equivalent to a preliminary or perfunctory checking of the return. Now here nothing in detail is done by the officer. Earlier it was the assessing officer who was passing an assessment under 143(1). Now this function is being done by the central processing center alone. Now here this is called an intimation assessment because in practical terms there is no assessment made by the officer. The mere income or loss is computed by the central processing center, and it only makes the following adjustments which are permitted under section 143 subsection 1. That is, any arithmetical error in the return, incorrect claim, if such incorrect claim is apparent from any information in the return, disallowance of loss claimed if the return is furnished after the due date, disallowance of expenditure indicated in the audit report but not taken into account by the assessee. Now, then disallowance of deduction under various sections that is mentioned in that subclause 5, addition of income appearing in Form 26 AS. Now, this is an intimation assessment. The central processing zone has the power only to make these additions or subtractions in the income that has been returned by the assessee. The section also provides the information meaning of what is in the meaning of the term incorrect claim apparent from any information in the return, which I've given in this slide along with the examples. Now, any term which is inconsistent with another entry of the same or some other return is, now, for example, I have an income which I have shown as income from other sources, but such income is deducted from the business income, but I don't show it as income under the head that it has to be shown. So such examples are given in the section itself. Now, the next provision is 143 subsection 3, that is an intimation assessment is made by the central processing zone if it on receipt of the return. Intimation assessment cannot be made by the central processing zone after a period of 1 year from the end of the financial year in which the return is filed. Now, assuming that the assessing officer gets certain details from the annual information register, that is, assuming that somebody has registered a sale deed for above 50 lakhs, this information automatically goes from the sub-registrar's office to the income tax department. Now, if such information is available, then the assessing officer will take up a scrutiny assessment. Apart from this, there are also scrutiny assessments which are picked up randomly by the computer for scrutiny. Now, this is a detailed assessment. For this purpose, the assessing officer has to first issue notice under 143(2). This is a mandatory procedure. This notice has to be issued within 6 months from the end of the financial year in which the return is furnished. Now, for example, if the return is furnished on 30th of June 2018, then notice under section 143(2) has to be issued on or before 30th September 2019. Because end of the financial year in which the return is furnished is 31st March 2019. Now, within 6 months from the end of the financial year in which the return is furnished, the notice under 143(2) will be issued by the assessing officer. The scrutiny assessment can be a limited scrutiny or full scrutiny. The Central Board of Direct Taxes issues guidelines or instructions every year or from time to time with regard to what is a limited assessment, what is a scrutiny assessment, what are the types of assessees that have to be picked up for limited scrutiny, what are the type of assessees that have to be picked up for full scrutiny. Now, if an assessment has been picked up for limited scrutiny, then the assessing officer will scrutinize only those issues. He will not go beyond those issues in the original assessment under 143(3). Now, the limitation for completion of scrutiny assessment. Now, this limitation is specified in section 153(1), which is negatively worded. The section will start with the words no order of assessment shall be made after the expiry of. The section will not start with the words saying that any notice has to be issued within a period of 5 years. No, it will start with no order of assessment, no order can be made after the expiry of. Now, up to 2017-18, limitation was 21 months from the end of the assessment year. For the assessment year 18-19, limitation is 18 months from the end of the assessment year. From assessment year 2019-20 onwards, limitation is 12 months from the end of the assessment year. Now, from 19-20, we also have from 18-19, we also have the option of an e-assessment, where the assessing officer will, while issuing the notice under 143(2), itself specify that if the assessee does not want to come for a personal hearing and he wants to opt for an e-assessment, he can submit his reply through the portal itself and also submit his written submissions through the portal itself, and the assessing officer will make an assessment based on that. Now, the transfer, if there's a reference to a transfer pricing officer, the period available for assessment is extended by 12 months. So we are all aware in what circumstances reference is made to a transfer pricing officer, as this was dealt in detail by Mr. N.V. Balaji in one of the earlier sessions. Now, when no return of income is filed, then the assessing officer has the power to make a best judgment assessment under section 144. Now, this best judgment assessment is similar to what we find in the indirect tax enactments also. But here a best judgment assessment power is also granted to the assessing officer if the assessee fails to comply with the notice issued by the assessing officer calling for details, or he fails to comply with the directions asking the assessee to go in for a special audit. If all these directions are also not complied with by the assessee, then the assessing officer has the power to make a best judgment assessment. Now, the next provision is assessment under under section 147. This is the section which sees the maximum number of litigations under the Income Tax Act, because this is a section which we can't strictly call as a reassessment or a revision of assessments section, but this section is also has the words used in 147 are assess or reassess. Therefore, the normal understanding is that when an assessment has been made under 143(1), that is an intimation assessment, then this is only an intimation given to the assessee. There has been no assessment by the assessing officer. Therefore, when the 147 provisions are invoked, it is literally an original assessment. If a scrutiny assessment had been done by the assessing officer earlier, then when the provisions of 147 are invoked, it becomes a reassessment. This is what we colloquially understand it, though the section uses the words assess or reassess. Now, when can an assessment under section 147 be taken up? If the assessing officer has reason to believe that any income chargeable to tax has escaped assessment for any assessment year. For reading, it's very simple. It looks as if it's a very straightforward provision given, but this is the section which has the maximum litigation. Now, when the assessing officer decides that an assessment or a reassessment has to be made under 147, first thing he will have to do is issue a notice under 148. The time limit for issuance of such a notice and preconditions to be satisfied for the same are found in 149 to 151. Now, the first proviso to section 147 stipulates that where an assessment under section 143(3), that is a scrutiny assessment, or 147, that is if earlier itself a revision of assessment was done under 147, the assessing officer still has the power to make a second revision of assessment under 147. Any number of revision of assessments can be made subject to the limitations. Now, the first proviso to 147 stipulates that where assessment was earlier made under 143(3) or 147, then no action under 147 shall be taken after the expiry of 4 years from the end of the relevant assessment year, unless the escapement is by reason of failure on the part of the assessee to file a return under 139 or respond to a notice under 143(1) or 148, or to disclose fully and truly all material facts necessary for his assessment for that assessment year. Therefore, the proviso says that if the assessee is able to prove that he has fully and truly disclosed all the material facts at the time of original assessment, and it was the assessing officer's fault not to have asked further questions on it, or to have simply, let's assume he has overlooked it or ignored it, still the assessing officer will not have the power to make a reassessment after the expiry of 4 years. In such situations where the assessee has provided all the information at the time of original assessment, the limitation would be only 4 years. Now, coming to the next, the first proviso of limitation, that is, even if the assessee says that I have shown all facts correctly and truly at the time of original assessment, that proviso of limitation of 4 years will not apply where any income is in relation to a foreign asset, that is, in relation to any asset located outside India. Now, in this case, the limitation of, there is no limitation of 4 years. Under 149, the limitation has been specified as 16 years. Now let's come to the question of what is full and true disclosure by the assessee. The explanation 1 to the section 147 provides that mere protection of accounts by an assessee will not amount to disclosure within the meaning of first proviso. Therefore, if an assessee says that, no, it was there in my balance sheet, these figures are available in my balance sheet, but the assessing officer has overlooked it, that does not amount to full and true disclosure. Yes, but if the assessing officer has raised any query with regard to that particular source of income or source of expenditure, and the assessee has given an explanation through a letter or his objections, whatever we may call it, but the assessment order is silent on those grounds, on that issue, still the assessee can contend that I have made a full and true disclosure. The explanation 1 will not apply in this case, because I have drawn the assessing officer's attention to that particular portion of my balance sheet. Now, the explanation 2 to section 147 provides the various situations which shall also be deemed to be cases where income chargeable to tax has escaped assessment, namely where there has been an excessive disallowance by the assessing officer, where there has been an excess claim of depreciation, etc. Even those cases will be treated as an escaped assessment, and the assessing officer will have the power to make a reassessment. Now, coming to section 148. Now, prior to assessment under section 147, notice under section 148 for the same has to be issued by the assessing officer, and the time limit for such notice has been specified under section 149. Now, as per section 149 of the Income Tax Act, notice under section 148 cannot be issued for the relevant assessment year if 4 years have elapsed from the end of the assessment year, unless the case falls under clause B or clause C mentioned in that section. Now, if 4 years have elapsed, but not more than 6 years have elapsed from the end of the relevant assessment year, the assessing officer will have the power to issue a notice under 148 only if the tax which has escaped assessment amounts to or is likely to amount to rupees 1 lakh or more. If the escaped assessment, the tax on the turnover on the income that has escaped assessment is going to be less than 1 lakh, then the limitation of 4 years only will apply. If it exceeds 1 lakh, then the officer has the power to issue a notice after 4 years but before 6 years. Now, 4 years but not more than 15 years have elapsed unless the income is in relation to a foreign asset. Therefore, if the income is in relation to a foreign asset, there is a bigger period of limitation provided under the Act. Now, the most important part here is, before issuing notice under section 148, the officer has to record reasons for reopening. Now, under the Income Tax Act, it is not necessary for the officer to provide the reasons at the very first instance to the assessee. As long as the reasons are provided in the file, it is available in the file, the officer has recorded the reasons, that is sufficient for the officer to issue a notice under section 148. Now, it is necessary, mandatory, that the sanction of the higher official, that is the Principal Commissioner of Income Tax or Chief Commissioner of Income Tax or the Commissioner of Income Tax, is obtained by the assessing officer, where he issues notice beyond a period of 4 years. Now, the commissioner has to make a satisfaction note that he is satisfied with the reasons provided by the assessing officer that yes, this is a fit case for revision of assessment. Now, the satisfaction note has to be as said by the commissioner. Now, once the assessing officer issues a notice under section 148 of the Income Tax Act, if you see the notice, it will be a mere 4-line notice saying that the assessing officer has reason to believe that such and such turnover, that there has been an escapement of income escaping assessment. It will not contain any reasons. After this notice is received by the assessee has to file a return of income first in response to the notice under 148. Once the assessee files a return of income in response to the notice under 148, then the assessee has the right to ask for reasons from the assessing officer. The assessee will seek reasons from the assessing officer as to why he has issued a notice for assessment under 147. Then the assessing officer will provide the reasons that have been already recorded in the file. These reasons will be provided to the assessee. Now, this is a procedure that has been developed by the Supreme Court in a judgment which is often quoted by the assessees, which is GK and drive shafts. Now, in this judgment, the Supreme Court has laid down this procedure, saying that the assessing officer will first provide the reasons for reopening when the assessee asks for the same. When the assessee asks for the reasons and the assessing officer provides the reasons, the assessee will have to file his objections, preliminary objections to the reasons. The assessee need not canvass his case on merits. The assessee can simply say that the preliminary limitations provided on the Income Tax Act, saying that the assessing officer has actually commenced the revision of assessment on a mere change of opinion, and the assessee also proves in this reply that there has been no failure on his part to make a full and true disclosure at the time of original assessment. These preliminary submissions are made by the assessee, and the assessing officer will first have to pass an order on these objections made by the assessee to the reasons for reopening. Now, this is the procedure laid down by the Supreme Court in the income tax assessments. We don't find any such parallel in the indirect tax assessments. Now, what happens is, even before the assessing officer goes on to the merits as to whether a particular expenditure is allowable or whether a particular income has escaped assessment, on this preliminary issue itself, we find several litigations before the High Court. Now, one thing I also found very strange in the income tax assessment orders was, though the assessing authority may have called for details with regard to everything under the sun, the assessee also would have furnished this in hundreds of pages of his reply. But the assessment orders will not contain discussion on all the issues. Now, when we saw assessment orders under the Sales Tax Act, that is the Tamil Nadu General Sales Tax Act 1959, when I entered into the profession, we found that the assessment orders contained discussion on all the issues, on all the turnovers that were reported by the assessee in his return of in his monthly returns under that act. But in Income Tax Act, when we see an assessment order, all issues are not discussed by the assessing officer. In fact, the assessment order will be silent on all issues except those issues where the assessing officer makes a disallowance. Now, this seems to be a little strange because this does not ensure transparency. Now, an assessee may say that I have furnished my reply, but when we look at his reply, it runs to hundreds of pages, which is actually humanly impossible for any person to have looked into every turnover in detail. But it is not the assessee's fault also. It cannot be the assessing officer's fault also. The biggest problem is in the Income Tax Act, we do not find detailed orders. We find orders only where the assessing officer wants to make a disallowance. That issue alone he would have discussed in the assessment order. Therefore, it becomes very easy for the assessee to claim that he has furnished all the information. Any attempt on the part of the assessing officer to make a revision at a later point of time amounts to change of opinion. And on this ground itself, the reassessment is set aside. Therefore, it is time that the officers are instructed to pass orders on all issues that they have called for. That is where they have sought details, even though the order may run to hundreds of pages. This is in the interest of the assessee as well as the department, and also to ensure transparency. Hence, I will now, Mrs. Usha Rani, we will take over. This is what is assessment under Income Tax Act.
Good evening to one and all. I thank Madam Hema Muralikrishnan for enriching our knowledge elaborately on different types of assessments, reassessments, and time limitations under Income Tax Act. Now, I welcome Pushya Sitaraman, Madam, and I am delighted to say a few words about her who doesn't require any introduction. She is a very gentle and kind human being who has great knowledge in the tax field, and she is the second designated woman senior advocate in our tax law. We admire that the way she presents the cases before the court in a very polite and humble manner. She never loses her politeness and patience in any situation. She is highly respected among all the juniors as a great guru, a polymath, and a great inspiration to all of us. She encourages and supports the juniors to keep learning and helps in preparing the cases and present before the court. Now, I welcome Mrs. Pushya Sitaraman, Madam, Senior Advocate, to say her views and summarize the presentation made by our guest speakers.
Usha ma'am, I'm sorry to interrupt.
Yeah.
Ma'am, I think two of your mics are on. There's a lot of disturbances in between.
Mine? Oh, somebody
Yes,
else.
ma'am.
Okay.
Not Pushya ma'am. Usha ma'am.
Usha.
There is only one mic is on.
Okay, but there seems to be some
Disturbance?
Sorry to interfere. Usha's TR is also in the same room.
No, madam. He is in another room only. He is not in the.
It's echoing. Is your phone on?
No, ma'am. That also not.
Okay, never mind, ma'am. We can proceed, ma'am.
We'll proceed.
Yes, ma'am.
Brother, can I bring first from the first?
No, you were clear, but except there was an echo all the time.
Yes, ma'am. Ma'am,
We could
Pushya
make
ma'am,
out
you
well.
can. Yes, ma'am.
Usha, I thank you so much for your kind words. I first of all, I want to congratulate Hemalatha, Maithili, Aparna and Hema for their very lucid presentations, which although the time was very short, they really packed it in very well. Before I start I just have a couple of points to make on what was already been said. In indirect taxes, the onus to claim the refund is on the SSC. You have to file a refund claim. Whereas in income tax, no separate claim needs to be made. The return will show, and in the course of the assessment, if the officer finds anything, then he will give you the refund. Another thing I wanted to ask was, Aparna said in summary assessment, there is no show cause notice and there is no opportunity for personal hearing. I was wondering whether it is because a summary assessment, the section itself says that it is to be done only in circumstances where prejudice will be caused to the department or if delay occurs. That is probably why no show cause notice or hearing has been provided, because it seems to be, at least it's supposed to be done only in matters of great urgency. The fact that it might be misused is a different thing. One more thing is that GK and drive shafts kind of thing is not applicable in indirect taxes because they don't issue blank notices. They have to, when they raise a demand, they have to compute the amount, they have to compute the period and then issue the show cause notice. Whereas in income tax for a reassessment, it just says that I think some income has escaped assessment. Even the nature of income is not indicated, and asking the SSC to file a return. That is why the Supreme Court has taken this view. Now, Vardhini, can you start the slides, please? So far we have been discussing assessments, but there is a big elephant in the room that nobody has talked about. I would like the participants to please quickly send your ideas on what the elephant in the room is. In the meanwhile, while you're sending that, let us go on to the next slide. Normally, when two persons are in a dispute, like when we go to court, the judge decides who's right, who's wrong. In tax assessments, the assessing officer is the person raising the demand. The assessee is the person who's refuting it, but the decision-making power is in the hands of the assessing officer. You can say that he is not really personally interested in the matter. He's only doing his job. But unfortunately, they're all given targets, revenue targets, and then their appraisal will depend on the kind of the appraisal will depend on the kind of assessments they make. So you'll find that in many cases, most of you must have seen, where you go for an assessment, they might agree with you informally, but say, appeal poi relief vaanganga. It's not, they don't want to take a chance. Unfortunately, this lack of trust on the officers makes them unable to really render justice. An officer to be competent, really, one, he has to have a competence for the SSC to get a fair order. The officer has to be competent, he also has to be honest, and he has to be courageous. Mostly there's pressure from the bosses, which they do not have the guts to question, and therefore, even if he agrees that a disallowance cannot be made or an addition cannot be made, he would make it under pressure. The next one, please. Have we got any views on what is the elephant in the room? Has anyone sent in anything on the elephant in the room, please?
Chat room. You can see the chat, madam. I have sent some.
They have asked if it is prosecution or best judge assessment or the charging sections.
No, the elephant in the room is corruption. That is something we don't talk about. But it plays a very, very big role in assessments. It all, both direct and indirect taxes, as all of us know.
You're limited to assessment only, madam. You're limited to assessment.
But that is also a factor in assessment, Srini. Everybody knows not only situations where a good order is passed in a bad case, but also a bad order is passed in a good case also.
This is best judgment.
Best judgment. Or is it lack of judgment?
Lack of judgment.
Can we go to the third slide, please? Now, the future, they have already, the e-assessment scheme was issued in income tax in towards the end of 2019. And they want to bring a Digital India initiative. Initially, we were also wary of it. But I think now with this COVID, most of us have become more comfortable with the technology. We're having all these meetings. We'd have never thought that we could have webinars on a daily basis, which would be attended by huge audiences. So technology can play a huge role. There is, I think those of you, I haven't attended any e-courts, this visual courts at all in the High Court. I'm sure a lot of you are finding that technology can make a difference. And so they were hoping to make it corruption free. They started it in income tax, but I think no assessments have been made so far. It will have to come in future. And can we show the next slide, Vardhini? Yeah. This is the procedure they are planning. So there is, supposing an assessee in Chennai, he files his return electronically. The National E-Assessment Center will allot his case to anyone anywhere in India. The assessing officer may be, say, sitting in Gujarat. And then there'll be a scrutiny officer who's supposed to scrutinize the accounts, who may be sitting, say, in Orissa. And once the assessment, he makes a draft assessment order, the National E-Assessment Center may send it to another officer to review it somewhere else. I think they're just hoping that all these various factors where it is faceless, where you're not doing a favor to an SSE or not being intimidated by an SSE, and that kind of thing, they're hoping to do that. Ultimately, once everything is done, it is transferred to the jurisdictional AO, who will be in the place where the SSE is. The hearing, they are also providing hearing by way of video conferencing in this kind of case. We must see how it goes. Of course, I don't think any advocates appear in assessments in income tax. We must find out from chartered accountants how it goes. Apparently, I understand that they have also started it as a pilot project in customs in a few centers. And if it works, it might go on. Technology is something that is here to stay and we can't really question it. But unfortunately, I wonder how ready they are. Even the CPC that processes all our returns. One advantage a lot of you may be seeing is that we get our refunds quite soon these days. But at the same time, you make some, the computer can make some very gross errors. You know, because it's sort of, I think the software is not really taken into account. They have only given some conditions or panels that it follows, and if it's something outside of that, it doesn't really understand. In fact, in that next one, Vardhini, in the, they had, I think Bhaskar appeared, or there was a case where, by Justice Saravanan, where he has said that it is the government initiative is a laudable steps taken by the Income Tax Department, I'm quoting, to pave the way for an objective assessment without human interaction. At the same time, such proceedings can lead to erroneous assessment if officers are not able to understand the transaction and statement of account as an assessee without a personal hearing. We are hoping that the video conferencing personal hearing, and now that people have got used to video conferencing, may make a difference. So, and the time frames are shorter and so on. These are the things that are they are afraid of. Next one, Vardhini. The previous one. The e-assessments will only cover regular scrutiny assessments. It will not cover reopened assessments under 147. It will not cover any other best judgment assessments or giving effect to appellate authority orders and so on. It will not. But penalty can be done. Penalty can be imposed by an e-order. I'm not sure, although this slide says that email communications are missed. But email, I think, there is more certainty really than a letter. But there are a lot of assessees who may be running fairly big businesses, but you know, you'll find that, you know, kirana merchants and so on who have huge turnovers, but who are not really comfortable with the electronic medium. People like that might find it difficult. And also, like cash system of accounting, which most advocates follow, you'll find that the client has, as soon as you raise the bill, he has already deducted tax, but will be sending you the money in the next year. So that kind of thing, they may not, the computer may not be able to match, which you may be able to do if you're explaining to the officer what it is. So the self-assessment, in all taxes, I think self-assessment is by way of really filing a return. When you file a return, you assess your tax and you pay. And that is your own self-assessment. The concept of show cause notice is not there in income tax, unlike the indirect taxes, except for imposition of penalty or where a best judgment is sought to be made. And summary assessment under GST appears to be on a third person, not on the assessee itself. Whereas in income tax, a summary assessment is really what they call an intimation, where arithmetical errors are corrected and some blatant mistakes are corrected and the assessment is made, where a scrutiny or a hearing is not required. Artificial intelligence. We were listening to, I think you have been in some other sessions, we had heard about artificial intelligence, where unlike an automation by a computer, artificial intelligence really applies its mind and will immediately be able to say, okay, this is covered by this point, this is covered by this issue. And hopefully, if the computer is doing the assessment, all that these issues are covered and so on, whether in such and such a case this can be allowed and so on. can be done. This would, even the e-assessment really is supposed to reduce the scope of discretion of the officer so that their own personal prejudices and their own views on various areas don't come into play. We have to wait and watch how technology works and how a new world of digital tax administration can be worked. This is a nice slide that Vardhini has put in. Next one, Vardhini. That's it. Thank you. So can Usha?
I thank Pushya ma'am for her wonderful summarization of all types of assessment and reassessment with judgments and latest technical effects to indirect and indirect taxes. Now the floor is open to discussion. I invite the participants to raise questions if any please.
Before we move on to the questions, to all the participants, you can unmute yourselves. The option of enabling it's available to all. So you can unmute and ask the question one by one. You can raise hands and then you can ask questions. Sir?
Yes.
Yes, sir. You can ask. You can start, sir.
My question to Madam Aparna. Provisional assessment, whether it has to be done on invoice basis or monthly basis, or the period, total period of provisional assessment.
It talks about section 39. Section 39 talks about monthly return.
Aparna ma'am, you're not audible, ma'am. Vishwanath sir, can you turn off your mic till she answers and then again you can start.
Okay.
Aparna ma'am, you can go ahead.
Yes. Now, see, if you see section 60, which talks about provisional assessment, it talks about section 39(7). So 39(7) deals with 3 cases. One is the taxable persons who file their monthly returns, and then 2 notified persons. The government notifies certain persons to file quarterly returns, and then composition dealers who have to file quarterly returns. Therefore, obviously it is not an annual return, it has to be on monthly basis.
Asking about the finalization, supposing the finalization is for totally 8 months or 10 months, whether all will be clubbed and one assessment order will be issued or each monthly return has to be...
Not like that. It is what I tried to tell you, but suppose you seek for a provisional assessment.
Sorry, Vishwanath sir, can you mute your mic, sir, once you are finished, because there's a lot of disturbance.
Yes.
Yes, ma'am.
Depends on the period covered in your request. If it is going to be a period just for 1 month or 2 months, that will be the finalization of the provisional assessment. It cannot cover the entirety, because that is not the contemplation of the provision according to me. It is only the assessment or the issue or the request that is made is the basis. So depending on the request for which period it is covered, the finalization of assessment will take place. Any other views?
But there were a lot of disputes on this under the Central Excise law.
But if you see section 60, there is a little more clarity than the Central Excise laws. Therefore, I am saying, because there's a specific reference to section 39 and 39(7). Therefore, I think my answer is justified.
Thank you.
Aparna,
yeah.
Aparna, can I? This provisional assessment, normally the assessee requests a provisional assessment where he is unable to make a self-assessment. Supposing he is not sure of the classification.
Correct.
So you're asking for a provisional assessment now. And it takes some time for that order to be passed. Or he does it, he gives a provisional assessment. It will continue, no, until a final assessment is made. The next month, your product is not going to change.
Yes, that is precisely. See, the time limits are very specific as far as GST is concerned. The provisional assessment order has to be passed within 90 days from the date of request, receipt of request. And then from date of passage of this provisional assessment order, within 6 months he has to pass. So this is pertaining to that portion which is covered by the provisional assessment. It cannot.
So for that 9 months, the provisional assessment will hold it, you're saying. The date the assessee makes the request,
yes,
to the date of passing the provisional assessment,
correct,
and then the date of
for the period covered in the provisional assessment order. Yes.
Till the final assessment is passed.
Yes. And the final assessment, the upper limit is 4 years, which can be extended only by the commissioner. Normally it is extended by the joint commissioner or the additional commissioner. And if it is required for further extension, it can be extended by the commissioner. But unlike central excise, there is an upper cap of 4 years. And in fact, summary assessment, I was talking about the very peculiar about this section is, if you see the beginning of the section 64(1), it talks about the summary assessment on any person. Then the proviso, the subsection 2, it says on an application made by the taxable person. There seems to be some discord between subsection 1 and subsection 2. Subsection 2 says if an application is made by the taxable person within 30 days of this passage of this summary assessment order and there is satisfactory explanation, it can be dropped. But what happens is there is another catch. The proceedings under section 73 and 74 will be initiated. Therefore, there is no way to escape. It is, according to me, it is going to be viewed as a very draconian provision. I leave it to the assessee councils.
Aparna, to continue where I left, now that it is 9 months, the issue is for every month I file a return assessing my tax as provisional. There is no statutory requirement for me to file a final return again. This is the officer's job to finalize the assessment. The self-assessment cannot be done while doing final assessment, which is the jurisdiction of the assessing officer. I wanted to know whether he will club all the 9 months and arrive at the total adjustment and total excess payment, or he will arrive at the excess and short payment month-wise. That is my precious.
Month-wise. Month-wise, sir. It can't be done like that. That is my view.
There is no clarity on that.
Yes, I agree. There is a question by Satish on unjust enrichment. I think Maithili can...
Yes, okay.
I'll read the question. The query to the panelists. A particular goods under CTH is exempt from tax on import. Department does not upload the notification. As a result, importer is unable to obtain the benefit of notification. Later, he makes a refund claim of duty charged. Department has 2 objections. 1, that importer has not sought reassessment, and 2, bar on account of not providing unjust enrichment. Is the refund claim maintainable? If so, does the importer have to satisfy the unjust enrichment requirement?
Yeah, so here, first of all, if the notification is not uploaded and it is applicable, it means that the rate of duty stands reduced or probably made nil or whatever it is, where the importer need not have paid under law the duty that he had paid. So the department is barred from collecting what is not payable under the law. And the assessee cannot suffer for the notification not having been uploaded. Of course, whether a parallel question arises whether the notification has in fact come into force, because if it is not uploaded, it has not been available for sale to the public. There are any number of judgments that till publication of the notification does not come into force. That is one aspect. But assuming for whatever reason, technically the assessee misses it, he can always bring in the notification under section 149 and have his bill of entry corrected. saying that there is this notification, these are the facts which were available at the time of filing of the bill of entry, and the bill of entry has to be modified and thereafter seek refund. And if all else fails, then now we come to the question of unjust enrichment. He has paid excess duty because he was not required to pay, and he has paid it, though he was exempted from payment of that much of duty. But he has sold the goods to somebody else and passed on the benefit. In that fact situation, what happens? The person who has purchased the goods can seek refund. These are among other options, and of course we can always work out the nuances after looking at all the fact situation on how best we can get the benefit to the assessor. Thank you.
Madam, is that possible under the customs law? Buyer can claim. I don't think he has been given a right.
Buyer can claim. There was an amendment brought about. I must tell you, the person who has owned I'll just come back to you with the provision. We can go on to the next question. I'll just come back so that I don't hold up the meeting time. I'll just look at the book and tell you.
Swaminathan sir, you can ask your question, sir. You can unmute your
question. Is to the senior counsel. Pushya madam, we have not seen in the book the word called protective assessment. In fact, actually, Hema Muralikrishnan has not spoken about the protective assessment. But the assessing officer passes protective assessment. Just can you tell me that have there any constitutional validity challenges against what is protective assessment? This is my question. Ma'am, to unmute yourself.
Protective assessment is where the assessing officer is not sure as to whom the income belongs. So they don't want to chase one guy and then find that it actually belongs to someone else and then find that they missed the bus. So they do what is called a protective assessment. But where a protective assessment is made, you cannot demand the duty from the person from whom the protective assessment is made. The duty can only, supposing the guy, the person on whom the substantive assessment is made wins in appeal, then the protective assessment becomes substantive. Then at that point only you can realize the tax from them. Until then, actually he is riding two horses. But
Madam,
because the yes.
In fact, protective assessment is also made on the same person for different assessment years we make it. Let's take this capital gains example that we normally have. We find the assessing officer making assessments in both the assessment years.
Yes.
Just
they're not sure, so they'll...
Yes. I suppose the summary assessment that is found in section 64 has probably got reference to this protective assessment under the Income Tax Act. Because
yes, so a person other than the taxpayer. But here actually there are two people who are simultaneously assessed.
Ma'am, has this been challenged in any courts or any other thing that you can't assess two people simultaneously? Is there any case law?
This is not a question of assessing. Certainly, there are lots of cases where the same amount has been taxed on. You have to specifically say this is protective. In which case, there is no bar. But if you are taxing it in two hands, then the courts have come down heavily on it.
So I'd like to add at this point, Pushya and Swaminathan, Supreme Court says in a protective assessment you can do recovery. That's very strange. Even though it's not an assessment, Supreme Court says, am I audible to you?
Yeah.
Yes, sir. Yes, sir.
Raise your voice. Raise your voice.
Supreme Court says you can do recovery in a protective assessment. It's very, very far-reaching. And I don't know whether you can even file an appeal against the protective assessment.
You can file an appeal.
I know, it's common sense. But,
I mean, appeals are being entertained.
I agree. Right or wrong is entertained. And there is also a recovery mechanism. Supreme Court says you can recover in a protective assessment. It's against the SSC, but let's get prepared.
Yes, sir. That is because you always get refund with interest.
So you're talking a very interesting point. It's not interesting.
Rate of interest is better than the bank. Why don't
No, that is why. That is why they brought this 244D people are making too much of investment in favor of the income tax department, earning more interest.
Yes, yes.
That's why 245D was introduced to nullify
Yes.
that practice. Anyway, thanks very much. Sorry for the interruption.
No, we must thank you for the information, sir.
Information.
My favorite department.
Yes.
I think Sheila has joined us. PP.
So I wanted one question on income tax and in excise. There's a problem which I had to face before the Delhi High Court. See, if you claim depreciation in income tax, there is a problem in ModVat.
Yeah.
Long ago. If you don't claim in ModVat, in income tax, you can't claim. There was a dilemma. Now, it's a local company in Chennai. They decided to not to claim depreciation for ModVat, but claim depreciation for income tax. So the argument was the common appellant or the respondent is the central government. How can it take a different stand? Same goods, same nature of claim. I can't choose between income tax benefit and excise benefit. It can be case-to-case based different standards possible. What, according to you, the allied green panelists are? Is it will you reject both, or will you accept both, or deny both? Because there's a prosecution provision for both.
Yes.
This happened in Chennai. One of the Korean company decided to take a particular product out, and they said we want ModVat benefit immediately. Then the department said you can't claim depreciation. They gave it in writing, saying that we don't want depreciation. When it comes to tax assessment, income tax, they said we want depreciation. This is before the Delhi High Court. We contested, but in income tax, the time limit had expired, so we went under 154. So the question was, can a mistake lie on a record given by me to the tax department, because my return, my balance sheet, my paper, everything is mine, and that mistake, according to me, is rectifiable because I want a legal claim to be allowed. But they started quoting my excise, saying that it's central excise here before stat. You withdraw the appeal, I'll consider here. And when it came to excise, they said you withdraw from income tax. Of course, we lost both.
That is sad.
It's very sad, but I want a relief from you green panelists.
So,
see, I think having given a commitment that they're not going to claim depreciation, I think it was wrong on the part of the SSC to claim
there is no
depreciation.
estoppel. There is no estoppel in income tax or in direct taxes.
No, because the ModVat was granted to him only on the ground that he did not claim depreciation.
Right, that does not prevent me
because
to take a
that
different
section,
stand. That does not mean I can't take a different stand in direct taxes.
But
indirect tax.
Having given a commitment, how can you do that?
No. That is for that act. That act I give a commitment. So this
no,
act,
in that act there is no depreciation. There is no depreciation under indirect tax.
I abandoned it. No. In ModVat scheme, a product cleared out of the factory, I should not claim depreciation. I have to give it in writing. If I give it in writing, in income tax law says you gave it in writing to the other wing of the central government. How can you claim here? So you appear for assessing in income tax, Pushya, let's assume.
Yeah.
Let's say Jayalakshmi appears for the ModVat thing. Both are coming before the same forum. So we had the same problem in stat as well as income tax and the income tax hierarchy. We are before the Delhi High Court. We lost it on some technical ground. That's okay. But what is right?
But one of the two. See, you can choose. I want ModVat, it's more beneficial to me, or I want depreciation, it's more beneficial to me. Rendu kekka mudiyadu.
No, today I can have masala dosa, tomorrow I can have rava dosa. It's my choice.
No, but having eaten the masala dosa, you can't have.
There is no impossible. My stomach is my stomach. There is no undue enrichment.
I think the question is, to put it, you said you are allowed idli because you will not have masala dosa. Then go and say, I want to have masala dosa. I don't want idli. So you say, no, I return the idli and take the masala dosa. You can't have both. You can't have the cake and eat it too.
I don't want cake. I only want dosa.
No, but this is for the very same goods, right? So
yes,
the same capital. Yeah, so when it's very same goods, then you've decided what you want in the first place.
Quite right. That's a different enactment. Can I not get a benefit in GST and in some other act?
Can't get a benefit audit for the same.
So can I interfere?
Please,
can I
please
interfere?
help me out.
It doesn't matter that income tax does not say it will be your argument will
Sir, I
be
think
cross-references to excise. That's what
The House of Lords says I can choose the least of taxation to me. So I can choose what I want that day. What's wrong? The morning I may be
No,
good
you
man.
can, but that you can. You decide whatever is lighter on you, you can choose. But you have to forego what you have already availed earlier.
I'll
If you're
engage the
willing to
service
do
of Mr. Viswanathan to protect me now.
Sir, if I understand your fact, this is with reference to a capital good,
Yes.
where you have taken moderate credit in the first instance.
Yes.
Now you wanted to shift to income tax.
Yes.
So under income tax at that time, you had sufficient time to file a revised return before the income tax.
There was a problem.
You did, but you have done without reversing the credit in the account on the moderate account. That's the problem. You should have foregone if you have debited that and if you have not contested moderate. Automatically you will be eligible. You will be able to show that you have not availed moderate. That is a condition which you have to fulfill. You can't
your
keep.
brief is to support me, not argue against me.
No, sir. This is the law.
No, he's also in green now.
Yeah.
No, I am
I'm in the
saying
red
what
zone.
what is the law? You cannot have, as rightly said, you can't have the cake and eat it.
See,
You
I'm
have
a
to
vegetarian.
forego
I don't
one
want
place.
cake. I want dosa. That's all.
No, you take dosa, but forego the cake.
Okay. I'll give the cake to you. Thank you.
Thank you.
Yes, Mr. Vishwanathan.
Yes, madam.
You wanted to know about whether this whether it is there in customs also. If you see section 27,
Ma'am,
it
I think
says-
Sheila ma'am.
Sorry, somebody else.
Yeah, ma'am, I'm Sheila. It was a very enlightening.
Signal is gone.
Signal gone.
Sheila, your signal is gone.
Can't hear you, Steve, at all.
You want to have masala dosa?
You made her very hungry, sir, with your masala dosa and rava dosa.
Sunday evening, he wants a masala dosa. Let him have.
Maithili, by the time you can answer Vishnu,
You answered that.
Okay, I will answer Mr. Vishwanathan.
I am hearing, madam. I am muting, but hearing.
Okay. See, here you just have to see section 27 as amended from with effect from 8/4/2011. In that, any person claiming refund of any duty or interest paid by him or borne by him. And thereafter, it also talks about the explanation talks about when the date of payment of duty is otherwise the relevant date for when an application can be made. Here in this case, it has been added date of payment of duty or interest in relation to a person other than the importer shall be construed as the date of purchase of goods by such person. You can read the entire provision, you will get it, you will agree with me.
Madam, it's all right, but the problem is, as you said, the notification was not incorporated.
It's not published, then it's
So
not.
there should be a reassessment. Where do I qualify? How can I maintain a refund claim when the assessment has not been done?
You cannot maintain a refund claim where the assessment, self-assessment is also assessment. If it's an incomplete assessment, you cannot go for it.
Yes, that is a problem. That's a problem.
That is a problem, definitely.
But the question is whether in this case of a refund, the second part of the question is whether the unjust enrichment test has to be satisfied or not is the question.
Yes. So I will answer that. First of all, you should be entitled to refund before we go into unjust enrichment. So we are now actually quite, the question is whether the notification has come into force and reassessment has to take place to become entitled to refund. That is, you can file under section 149 and say this notification was there, please amend my bill of entry. It's only after that your refund becomes available to you. assuming you have already sold the goods in the meanwhile and passed on the duty element, which is refundable to you, then it is for the purchaser can seek refund. That is the solution, not you.
So in which case the test of unjust enrichment will not arise.
Will apply.
Because he is going to...
Yeah, if he claims for him no unjust enrichment if he is not passed it on. But the purchasers will have to establish that he has borne the burden.
Yeah, the same test is there.
Yeah.
So the test of unjust enrichment is satisfied,
yes,
irrespective of whether it is the importer or the buyer.
Yes, yes.
Section 27 is very clear on that.
Very clear on that.
There is no dispute about that. That is what,
yeah.
Madam, I don't think you can do it by 149 because once the bill is assessed, there has to be an order of reassessment, which cannot be done by 149 also.
If you have the documents available at the time of import, see, if you see, there is a Madras High Court judgment on this issue. We may take a look at it, 149, and just tell you the judgment.
No, that is only for incorporation of any provisions or omissions or commission. Assessment as such is...
No, you can get it modified saying this exemption was not claimed and that has to be gone in through. I will just tell you there's a judgment of our own High Court.
That is reassessment, madam. If you are going to extend you that notification, it's reassessment.
See, if you see Usha International, 2019 365 ELT 56, Usha International is there. You can take a look at that, whether it will apply. You will have to look at the fact, but possibly there the Madras High Court has directed the officer to look at the claim that actually there was a say. I think unit price was different. What we have to examine the scope. If we have to push it through, we can push it through in that. That's all.
Yeah.
Thank you very much.
Thank you.
Sir, I think we have already exceeded our
yes.
So I may request
Yes, I thank
Usha ma'am to kindly give the vote of thanks.
I thank Madras Tax for giving the wonderful opportunity to present and interact both direct and indirect taxes combinedly and the captain of MPB, Mr. A.P. Srinivasan. I thank Nivedita who has created an appealing invitation for this webinar. I thank Prithvi, the host of this webinar, who worked very hard and tirelessly from day one of MTB webinar. Hats off to Prithvi. I thank Mrs. Hemalatha Madam for giving an elaborate presentation on VAT assessments and indirect taxes. I thank Mrs. Maithili Madam who has enlightened us with different types of assessment in indirect taxes by her wonderful and refined explanation. I thank Mrs. Aparna Nandakumar Madam for explaining the complicated topic of GST assessment through the pellucid speech. I would like to thank Mrs. Muralikrishnan Madam for her instructive brief on assessment and reassessment under Income Tax Act. I would also like to thank Mrs. Pushya Sitaraman Madam for giving an exhaustive and combined summary of all assessments in indirect and indirect taxes. I thank all participants who made this session very effective and interesting one and enrich our knowledge in various aspects, different types of assessments. Thank you. And I hope that because of the continuing lockdown of MPB may provide one more opportunity for women lawyers to present with the left of juniors present this session. Thank you. We go for the dinner at our residence. We are house for the town house.
Thank you very much, Usha ma'am. I once again thank all the participants for joining us today. Today we have again restarted with our series. We will be continuing in the days to come. So this session will be uploaded in our YouTube channel as well. The details of it will be, the link will be shared in the WhatsApp group, and the details for tomorrow's session will also be shared tomorrow. I once again thank all of us for joining us today.
Yes, Prithvi, thank you.
Okay, thank you, Prithvi. Bye.
Thank you very much. Bye. Bye. Bye, everyone.
Thank you.
Thanks.
I'll end the session now. Thank you.